It's time to do 55 minutes of business. Good afternoon. Welcome to Business Incorporated. Here's what we have prepared for you on this episode of the program. And Petron may begin lifting petrol from Port Harcourt refinery this week, barring any changes. President William Ruto of Kenya has dissolved 200 companies and is about to shut down 115 of them. Egypt is set to get $1.2 billion from the International Monetary Fund. Good afternoon, I'm Ini John Mekwa. We start from the global space. Gold prices inch higher on Monday, supported by a softer dollar, while investors await a slew of U.S. economic data, including the December non-farm payrolls report, for further guidance on the Federal Reserve's interest rate stance. Spot gold, we see, went up this afternoon at 0.2% at $2,643.69 per ounce, while U.S. gold futures went up slightly lower than that at $2,656.80 per ounce. We could have other metals for this afternoon. We see spot silver and platinum in the red, 0.2% down for spot silver, $29.67. Platinum is 0.5% down, $933.60. But a flip for palladium as it gains 0.9%, $920.09 per ounce. Now, oil prices hovered at their highest since October today, Monday, as investors are eyeing the impact of global fuel demand from colder weather in the northern hemisphere and Beijing's economic stimulus measures. I know that very soon we'll get the threat of a new COVID-19 threat in China would also face on this. Now, Brent crude futures went up 15 cents, that's about 0.2%. Now at $76, we see the price of oil really going up. 66 cents a barrel. WTI went up also 0.3%, $74.18 per ounce, gaining about 22 cents. That's what that is. And I know another thing happening in the oil space is the Saudi Aramco has said it will increase its price to buyers in Asia. So we'll see how that seeps into the general pricing of the market. Now, back here in Nigeria, almost 2 months since its resumption of operation, the Petroleum Products Retail Outlets Owners Association of Nigeria, that's Petron, said that marketers and retailers of petroleum products will start lifting premium motor spirit, that's petrol, from the Port Harcourt refinery company this week. According to the Publicity Secretary, Mr. Joseph Obele, since the refinery commenced operations in November, it's been supplying fuel to retail outlets owned by the Nigerian National Petroleum Company Limited only, though marketers still load fuel from the NNPCL. Mr. Obele clarifies that products from marketers currently buy from the state-owned company were imported. So we see how that will affect circulation and price at the end of the day. Now, 2025 moves along. PMS prices are in focus again. Questions on how PMS prices will go in 2025. According to Mr. Madaki Ame, the managing partner at BBH Consulting, as more refineries come on stream and competition in the downstream sector continues, lower prices could be expected. As we heard, Petron should be getting petrol from Port Harcourt this week.
I think that, the midstream and downstream regulatory authority needs to be very active in policing the industry to make sure that the refineries are running optimally, and that the whatever bottlenecks there may exist to competition should be removed. So that the market can get the most benefit, from the different, refiners putting their products in the market and wanting to gain market share. The same way we saw competition reduce the cost of of services in the telecoms industry is what we are expecting, will happen in the oil and gas sector, in the downstream, for supply of PMS and the other products in the value chain. So, yes, I think that prices will continue to go down, but whether we are going to be able to achieve a 500 naira per liter price for PMS in 2025, remains to be seen.
Yeah, it remains to be seen, and as the year unfolds, we'll see that. Now, another type of oil now, Kitikupa Oil Palm PLC, they say they're embracing an ambitious modernization project with the acquisition of 4 mills to be installed in some of its 8 plantations located across 3 local government areas of Ondo State. The first and second mills were built 50 and 34 years ago, respectively, with no addition one since then. To complement this installation of the new mills and ensure sustainable primary feeder for them, the company has finalized plans to plant nearly 750,000 and 1.2 million young high-yield oil palm seedling on its 5,000-hectare greenfield. This initiative is set to be flagged off by the Ondo State Governor, Dr. Lucky Ayedatiwa, in the second quarter of this year, 2025. Well, let's stay around that expectations price of petrol. The issue of debt servicing, which is supposed to be above or has been projected to hit more than 187 trillion naira this year, is our concern. As we delve into this conversation with the Chief Executive Officer of Flame Academy and Consulting Limited, Mr. Oji Udemezue. Mr. Udemezue, Happy New Year to you.
Happy New Year, my friend. How are you doing?
I'm doing good. Thank you so much. Welcome to the program. So I've heard a lot of...
Can you hear me, Ini?
Yes, I can hear you. I can hear you, Mr. Udemezue. So I don't know about you, but holding conversations on the economy and expectations for 2025, I've had some, high expectations. It's been more of optimism than, pessimism. I don't know, from your point of view, are you optimistic about 2025, talking about the benefit of the reforms, which the president has said we should be patient for?
Well, in life, we generally have to be optimistic, just to keep us healthy, keep us hopeful, and keep hoping that one day things will get better. But looking at the budget that was announced for 2025, the budget for me is overly optimistic. It is over ambitious and looking to me nearly unrealistic. But despite that, we will keep hoping and praying that at some point things will begin to click. Talking about expectation, looking at the budget, of course, one would want to expect that government will do everything possible to reasonably widen the tax net without taxing people more, because the economy is not doing well at this point. We are running a very fragile economy with a very unacceptable level of growth. And the heavy taxing of companies at this point will chase more companies away from Nigeria. Quite a number of them have already left the country, with a few more threatening to leave soon. And as they leave a trail of unemployment, weakening domestic or aggregate demand in the economy. So the budget we have announced, we need heavier level of revenue to be able to even attempt to do it 50%. And beyond revenue, I also expect that for the first time ever, this government should take seriously the idea of cutting down the size of the government. The Oronsanya report was mentioned early in this government when their president took over, and we took it very seriously that in a few months' time, that report will receive a great attention, whereby a number of government institutions that multiply or duplicate functions will have been closed down now or merged together or something like that, done to reduce waste in this economy. Nigeria is an economy that is hemorrhaging. It's bleeding. And while we are trying to administer more blood, we are not making similar attempt to tighten the system and lower the level of bleeding in the system. Unfortunately, that does not give hope, for 2025.
Group that is optimistic about 2025, Mr. Odemezue, following your trend of conversation right now. I mean, when people see a reduction in the price of petrol, for instance, and see that now our refineries, at least the Port Harcourt and Warri refinery, are working to a certain level of degree, we still have Dangote even exporting, which should bring in FX into the country. Don't you think that this perhaps will give a bit of hope?
Oh yeah, the adjustment, the downward adjustment in the price of petroleum product is a positive for Nigerians. Maybe not for Nigeria as a nation, looking at the fact that we depend a lot on oil for revenue and oil income into the country. But for us, now that the subsidy has been removed, so to speak, you find that the lower the global oil price goes, the better for Nigerians and their purchasing power strength. And of course, that will also taper inflation in a way. So that's inflation positive if oil price goes further down. And one expects that as US pumps out more oil, I don't know if you can hear me, Ini. It looks like the network is, yeah, can you hear me, Ini?
Go ahead, Mr. Odemezue.
Okay, so we expect that as Trump takes over in US in the next few days or so, his government will likely put out more petrol, more crude oil, in the global market, and that will further drive global oil prices down. And that, again, will be a plus for the price of refined petroleum product. While that may not be a positive for our budget, which is benchmarked at about $75 per barrel, you may go lower than that. I see oil price globally going as low as $65, $60 per barrel when US get to the position they want to get to in terms of oil output and global supply. So there are a mix of feelings here and there. So the refineries working is obviously a positive for us. If the president can get the refineries to begin to work, we're going to be creating more employment here. We're going to be subsidizing nothing anymore, and then we're going to see, the pricing of our petroleum product being more properly done. And at the end of the day, the amount of dollar we use to import refined petroleum product will also reduce, helping our currency to come near to the 1,500 naira to $1, which is the benchmark for this budget. Otherwise, we will see the dollar going much worse, higher against the naira. So we need to curb every avenue of demand for dollar for import. And very importantly, if time will allow us, we also need to look at, I expect that the government this year will pay more serious attention to non-oil export. Export of agricultural products, solid minerals that have remained mysterious in this country. It's being mined, but we don't know what's going on in that sector. The solid mineral sector, the agricultural sector, vegetables, crop, grains, and so on. There are so many things we can export in this country, even education, if we are serious. That way, we substitute import with local production and also furthermore export more than oil and get more dollar in to enable our currency stabilize and give us a better a chance for quantum growth in our economy towards the $1 trillion economy, which we expect to have in less than 8 years to come.
Yeah, Mr. Davis, another area of expectation is the savings from fuel subsidy. We know as at November, it was said to be at about 5 trillion naira or so. I wonder what it is now. It would be good to have the numbers. And the government has promised us that it will be channeled towards infrastructure, If it's something we could follow to say, okay, it's the Lagos-Ibadan Expressway, for instance, it's projected to take this amount of time. I guess that would also help Nigerians to bear what they're paying for transportation and other logistics.
Yes, like I said earlier, there's so much the government can do as low-hanging fruit to get our transport system work better, because you find that inflation, travels much faster through the avenue of, transport, price of transport increase. It has a very fast effect, on inflation. when the oil price goes up and price of transport, goes up. So if we can quickly work on that, not just to repair all our major roads, federal roads and so on, but also ensure that the rail system connects every part of this country. So that, like now, this festive season, you see a normal journey from Lagos to the east, for example, moving up from around 20,000 to 60,000. If our train system is working, that advantage, by suppliers of this service, we're not, undue advantage will not happen. But when the train system is regular, people can have different options, and therefore price stability will be more assured. And that's why we should stop looking at inflation management only from monetary policy point of view, where the central bank has, by the way, got to a level of monetary policy exhaustion. If we have other fiscal investments that will help alleviate or manage or abate the price game going on in the country, that will help us a lot. And that's why till tomorrow I pick quarrel with the so-called Calabar-Lagos Coastal Road, which is quite strategic, by the way, but it's not coming at the right time. Because we have several bad roads, Abuja to Kaduna, is it Aba to Calabar, or Enugu to, there's so many federal roads that are in very big, bad shape right now. Is it Shagamu to somewhere before Ore? So many of them in the east, west, north, and south. We have not done anything about them, and we're going into another big, for me, relevant project that is, not, due at this point. So that's the problem. And these things are going to run for several years before we see the impact. But if we can fix the existing roads right now, we can get the effect. Agricultural products can move from Calabar to Sokoto, through the rail system and all of that. And the high cost of food now, which is a major issue in inflation, food inflation, will come down in the short to medium term. And then we can now talk about those bogus projects later. So our priorities are not right. And that's why I don't see so much hope in the budget announced this year. Mind you, as of June 2024 end, Nigeria had made only about 6 trillion as total revenue as at date. And then we had spent about 10 trillion servicing our debt. If you look at that figure very well, you find that it's a figure that gives no hope for this economy. So something must be done to reduce our rate of accumulation of debt and ramp up our rate of non-oil export and widening the tax net without increasing tax per se for individuals and companies. The economy is dying, and we cannot afford to tax people much more right now. And as they all leave the country, we have a trail of unemployment following us, and the lower productivity giving rise to low GDP, and therefore a poorer nation, poorer citizens, and so on. Something needs to be done differently from what we are doing. The reform of this government, gave us hope initially, but the way they are being implemented and instability in the policies are not giving much hope for 2025. But we still stay optimistic, watching to see that if things will change through all these contributions we are making here and there. Thank you.
Yeah, is there any way we can escape this more than 187 naira debt servicing for this year? Is there a way we can escape it?
100, okay, you mean debt servicing?
Yes, it's projected.
Because this year we expect that debt servicing will take more than 20 trillion. You mean the debt service to revenue ratio that's currently above 100%. Actual, not what our president always presents as their hopeful. The actual is actually currently showing that we spend much more than our current revenue, our actual government retained revenue. We spend much more than that to service our debt, showing you that we must borrow to run recurrent expenditure, to pay salaries and so on, and do basic things in government offices. We must borrow to be able to do any single drop of infrastructure you see going on in this country today. And even at that, we borrow the money, for a project. What is the value of, secured, or what is the value got in all these projects? Issues around lack of accountability and corruption still pervade the economy or the polity. And these are concerns for me. So you look at a budget of 49 trillion thereabouts, where we say we will do only deficit of 13 trillion. But reality is that we did 10 trillion half year 2024. So there's no way we can do anything less than 25 trillion in deficit this year, even though it's being masked up with some figures that are, appear to polish things. But for me, in reality, and I bet you to check at the end of this year, we will not have done anything less than 20 trillion naira in servicing our debt, because it is almost like every single week or month, the Senate, the National Assembly will have to approve new debt for this government. You remember that our president had a few weeks ago or months ago called for debt forgiveness again for Nigeria. And in the midst of all of that request for debt forgiveness, we are still spending as if everything is normal. We're not cutting down size of government. We are spending so much irrelevant money in a National Assembly and all of that, whether it's security vote or whatever. Billions are being spent on individuals alone, while millions, hundreds of millions of Nigerians are going further down in their multidimensional poverty, which is very sad. So no reform in this country, I dare say, will work until we begin to go down our fiscal cliff, get more efficient and prudent in our spending, and become less wasteful in our governance. Yes, IMF and World Bank will always give us loan if we request. It's not their business to see. It should be actually moral obligation to see if this loan is even required to start with, or if government reform has gone to the level of trying to imbue efficiency in the system. IMF and World Bank, I'm sorry to say, don't so much care about how our borrowed monies are being efficiently applied in the economy. But they keep encouraging us that, our debt to GDP is still low, it's still below 60%, so we can borrow more. Onto what? How productive is our borrowing, in the end? Otherwise, all of us are gathering more and more debt for ourselves, our children, and the children yet to be born.
All right, Mr. Demezwe, I know that a lot of people have talked about cutting cost of governance, and perhaps you can give us one or two examples of what you think can be done in the fiscal side to help the situation that is upon us.
Government should stop incentivizing bad politics. Cut down the size of political office holders and all the SA to SA, PA to P, and all of those things. Cut them down. You save a lot of money from there. Look at all the ministries, departments, and agencies of government that are doing almost the same thing. Some places, nothing is being done. Ajokuta Same has not produced anything for several decades. Our refineries have been very redundant for several years, yet billions are being voted, both for the current expenditure in those places and the capital expenditure, which are just waste. People are staying in government work position without doing any work, and they're earning billions. How do we train them, incentivize their retirement and pull their effort into entrepreneurship? Don't forget that all the developed economies in the world, whether it's US or Germany, they are driven by entrepreneurship. But here, we're not encouraging that. We keep focusing on government, giving people jobs that are not relevant. People are redundant. People are ineffective. They are just sitting on government payroll, collecting money without doing anything. That must be addressed. We have more than 600 government parastatals that are doing almost the same roles. Some of them are duplicating role or multiplying. I don't want to call names here, but we know them already. Even the Oronsayan report mentions some of them, that they're going to be fused together or meshed together, or even closed down entirely, because what they are doing are already provided for elsewhere, whether in the security architecture, and at the end of the day, because of corruption, we see nothing happening. So for me, to call down the size of government is not just words. We should put it to action. Call down the size of the government personnel so that we can cut down our current expenditure and the fake budgeting going on in this country. Cut it down. And for National Assembly, I don't want to say more there. We know already that system is a very corrupt system of damaging this country. How can you be paying about 100 and some people, senators, an amount that can make more than 10 states, get revived and do better? It's unproductive. We are being selfish. We're incentivizing bad politics. That's why people kill today to win an election as a governor or a senator, knowing that once they do that, their life is made forever. That's not the way to go. In the same countries, politicians even earn less when they are serving government than when they are in private sector. There's no incentive to go there to serve except selfless service. But in Nigeria, it is selfish service. We kill people to go and serve them. There's a whole lot for us there, more than those who are going to serve. It's very sad for me.
You hope to see, some change that, will make some differences and reduce the cost of governance in the country. Mr. Ojudemezwe is the Managing Consultant and Chief Executive Officer of Flame Academy and Consulting Limited. Let's take a break now. Good to have you. Let's take a break now. When we come back, we'll have intraday's number, see how the market is faring this first full week, trading week for the year 2025. In a bit. You're welcome back. Still watching Business Incorporated on Channels Television. Let's head to the markets now. Look at intraday numbers, and we do have the sustaining of the 103,000 level for the NGX. That's Nigeria's stock market. 103,714.13. That's up 0.12%. Hopefully that will be sustained to the close of trade. Before we go to other market, let's speak to Caleb Alimi now to find out what's going on in the market, as well as expectations as we, embrace the 2025 trading days. Hi, Caleb. Happy New Year to you.
Happy New Year to you, Ini. Good afternoon.
Good afternoon. So tell us what conversations your market community has been having of expectations for 2025.
Well, 2025, for us in the fixed income space, 2025 will take shape from the budget for Nigeria, and largely from the deficit budget. The deficit budget is what the fixed income investments often fund, and we already know that is about 13.9 trillion as of now. We know that sometime during the course of the year, the revenue shortfalls, then the deficit sort of expands. But for now, what we are looking forward to is clarity on the size of the DMO's auction for bonds for month to month. For bonds for quarter one has not yet been published, but for treasury bills it has been published. They're going to be issuing a little over 4 trillion in the first quarter of the year versus about 5 trillion that is maturing. So that is for treasury bills. However, for bonds, we're waiting for the calendar the circular to show the direction for the bonds market. The conversation is largely about what papers will be, what maturities will the government be issuing, will the debt management office be issuing? Is there going to be a 10-year paper? Is there going to be a 15-year paper? What we observed or what we noticed last year was because the interest rates were very high, the debt management office pegged all the maturities at no more than 10 years, so that the interest cost is not too burdensome for a long term. We expect that will be the same thing, at least for the first half of this year, that between now and the first half of this year, it will still be the relatively medium-term bonds that would be in issuance. That is between a 5-year, 7-year, and a 10-year paper is what we're expecting, for them to issue. Subsequently, from, say, the second half of the year, if interest rates begin to improve, then we could see longer-term bonds. But for now, expectations on the market are largely around what we call medium-term bonds, 5-year to 10-year bonds.
Yeah, but Caleb, these are part of the issues. So we're just talking about debt servicing and how it's expected to be over 187 trillion. And it all fits on this. If interest rate remains high, then, to make the securities attractive, the yields will have to remain high. And that means that debt servicing also increases. So while investors are happy, the country is actually feeling it.
You're correct. I often make a joke that some of the debts that we're raising are, unfortunately, for maybe our grandchildren. Some of us children, but largely our grandchildren. This is going to be a conundrum that will continue until our revenue increases beyond, what we currently have, until we begin to run a surplus budget. But as long as we run a deficit budget, debt servicing will remain very high, and the burden will remain on, will be there for generations.
Unfortunately, the government is targeting 15%. If inflation gets to 15%, that means it's a cycle, it would affect. But a lot of people are doubting the reality of that. So that means that probably most parts of this year, we're going to see yields still trending higher.
Yields will remain elevated. Also, if you look at the money supply that has been created by reason of issuing these securities, yields will remain elevated for this year, as it is, because of the amount of debt that has been raised. That is not going to change. Like you mentioned, while investors may be smiling, the cost implication for the government, for the nation, is really, really concerning.
But don't you think that when we look at the fiscal side of the economy, we have our refineries working now, perhaps the reduction of the demand for FX, for import, and some other factors could help in one way. Maybe if the government would really emphasize non-oil export also, that could also reduce the demand and this debt servicing that we're afraid of.
Yes, all of this, can happen, but the question is, or the concern is, can they happen within a year? The answer is, it is unlikely. While you may choose to increase revenue from other areas, how can you close the 14 trillion deficit gap in 1 year? You can't do that. So if that is possible, then we could say, yes, inflation could drop to 15% and all of that. Statistically, even when base year effect kicks in sometime around the second quarter of the year, we're not going to see 15%. We're still going to be double digits or high or mid-20s, right? That's what we're going to see. It's not going to come to 15%. So over time, all of these things will come in place, but they cannot happen within a year. So except the outlook is for 5 years and above. But so long as the outlook is 1 to 2 years, then there is no miracle that can actually, bring inflation to 15%, so to say.
All right. So I guess we should just accept our fate for this year, Caleb, that investors will be smiling. But I mean, through the back, the general economy, they will also be feeling the debt servicing, which the government will be doing. And I guess that will be our story for 2025 in the country.
Yes, like we say, we are a prayerful country. Let's continue to pray for our children, because the burden is being created for them to solve.
Yeah, we'll continue to pray when we're not doing what we are supposed to do. But thank you so much, Caleb Alimi, for your perspective this afternoon.
Thank you.
All right, now let's look at other markets. I believe we had two EJX. Now, we didn't have the Johannesburg, but Johannesburg is in the green for this afternoon. For Egypt, it's in the red intraday, 30,065.75. While for Nairobi, this is the close for Friday, did really well. Still hovering around 126. That's where it closed. Well, now let's go to the Middle East and see what the market is doing this afternoon. Intraday, Dubai is green, 0.66% at 5,160.78. Abu Dhabi, looking very, very green, almost 1%, 0.83% at 9,400.09. Other parts of that region is the Tadawul. Tadawul of Saudi Arabia is also green. It's a green market in the Middle East this Monday. Qatar is also green, even though that's so slim, 0.02%. But I mean, they are comfortable at 10,480.84. We head to the United States now and see what's happening right there. U.S. equity futures were a little changed Monday morning as investors are looking forward to jobs data in another shortened trading week. Futures tied to the Dow Jones is what we see here at 0.14%. It's shortened week in the United States at 43,077. S&P futures also there, and NASDAQ, the tech guys, 0.67%. Now let's head to Asia and see what's going on. In Asia, the Nikkei is closed this afternoon, but closed in the red, 1.47. And Asia Pacific markets, they fell mostly as investors assessed business activity figures from several key economies in the region. We know one of them with their eyes on what's going on in the United States, so decision of the Fed, and of course those threats to demand in China is a major one. Kospi is in the green, more than 1%, 2,488.64, while the Hang Seng is in the red, 19,688.29. See other parts of the Asian markets this afternoon. If we can have other parts of the Asian market, Shanghai is in the red, as well as India. India's Nifty is deeply in the red, 1.73%, 23,591.39. 0.20. So that's what we have for the market this afternoon. Let's leave there now and go to Berlin, where our DW colleagues are standing by, and geopolitical situation around the world is their focus. It remains difficult, and we head as we're in the new year. There's the Russian war in Ukraine, there's a war in the Middle East, and other regional conflicts. So there's a new administration about to take over in Washington. We know that's counting down to incoming President Trump in a couple of days, less than 2 weeks now. Well, that might change things in the global trade landscape. He's been speaking a lot about, more tariffs may come up. How will this affect the global world, especially looking at Europe? Lars Holter has some details for us. Hi, Lars. Well, there's a new report out now on how companies were doing last year. What can you tell us?
Thanks for having me, Ini. Yes, it's a report by consultant firm Ernst & Young that looks at the 100 most valuable companies worldwide as measured by their market valuation or by their stock market value. Now, it's seen as a bit of good news here in Germany that 3 German companies actually made that list. That would be software giant SAP, as well as the industrial conglomerate Siemens, and then Deutsche Telekom as a telecommunication provider. Well, last year it was only 2 German firms on that list, but German participation, as well as that of most other countries, is relatively moderate. The list is strongly dominated by the United States. 62 of those 100 most valuable companies are in fact American. 9 out of the top 10 companies are American, and that includes all the big tech companies, including Apple in first place with a valuation of $3.8 trillion, followed by chipmaker Nvidia and Microsoft. There's Amazon, Alphabet, and Meta. Those latter two, obviously, the parent companies of Google and Facebook. Generally, tech and especially IT are the strongest on the list. That sector makes up a quarter of the listed companies, and their valuation is up 40% over last year.
So what does this tell us about the role Germany is playing in the global space?
Well, that's a tricky question because, as I said, there are 3 German companies on the list as opposed to 2 last year. But looking at the details, it's a dire picture. SAP, as the only major German tech company, places 32nd on the list. And then Siemens is 94th, and Deutsche Telekom comes in 98th. And when we're looking at valuation, or the difference between valuations between some US giants and those German companies, we can clearly see that they're not playing in the same league. Apple alone has a market value more than twice that of all 40 companies in the German blue chip index DAX combined. And looking a bit further down the list, there's also a ranking of the top 300 firms, and Germany has only 5 companies on that list after 11 in the previous year. All 4 German automakers used to be on that list. That is Volkswagen, Mercedes-Benz, BMW, and Porsche, and they have all dropped off the list due to the ongoing crisis in that sector.
Wow. Well, let's head to the market now, see what investors are doing.
Well, we're back in business, the first full trading week of the new year after a longer break. And here's an interesting nugget. In 2023 and 24, the DAX gained over 20% each year, and 2 extremely strong years back to back. That happened only twice before. And both times it was followed by a crash. And that was in 2000 when the dot-com bubble burst, and in 2008 when the financial crisis hit. So the big question, obviously, what are we going to get this year? Now, how are we starting? In short, with weakness out of Asia and with the DAX in Frankfurt working on that 20,000 point mark. Later today, we're gonna get an estimate of Eurozone inflation for January. At last reading, it stood at 2.2%. Some are expecting this number to drop just a tad further to 2%, which would be the ECB's official goal.
All right, Lars, thank you so much for those numbers.
Thank you, Ini.
Now let's come back to Africa, where hundreds of Kenyans have been rendered jobless and others risk layoffs after the government dissolved more than 200 companies and plans to shut down 115 others. Joyce Quirch gave the directors and stakeholders of over 115 companies 3 months' notice from the time the Gazette was published in December 2024 to explain why their businesses should not be dissolved. Among the companies listed for dissolution are entities spanning diverse sectors, including real estate, agriculture, education, pharmaceuticals, as well as construction. Then we'll go to Egypt, where the country is expected to receive a $1.2 billion disbursement from the International Monetary Fund this month as part of $8 billion program with the international lender. This is according to the Finance Minister Ahmed Kalchuk. Last month, the IMF said it reached a staff-level agreement with Egypt on the fourth review of the 46-month extended fund facility arrangement, potentially unlocking $1.2 billion disbursement. Egypt, grappling with high inflation and shortages of foreign currency, agreed to the expanded IMF program in March. A sharp decline in Suez Canal revenue, also caused by the regional tensions over the past year, compounded the economic woes of that country. The minister is saying that Egypt is targeting about $3 billion in the remainder of the fiscal year, which runs until the end of June, through diverse issuances to investors without elaborating further. His comments came in response to a question about whether Egypt plans to offer new bonds to foreign investors in the year 2025. And we're still in Egypt, where the country's non-oil private sector contracted sharply in December 2024, with the S&P Global Egypt headline PMI falling to 48.1% from 49.2% in November, marking the steepest decline since April and the fourth consecutive month of contraction. This downturn was primarily driven by subdued client demand and rising costs. The depreciation of the Egyptian pound, which breached the 50 per dollar mark in early December, intensified input cost inflation to its highest level in 3 months. However, as firms faced challenges in achieving sales growth, output prices were increased at the slowest rate since last May. The construction and wholesale and retail sectors recorded the most significant downturns, while the services sector remained relatively stable, supported by steady new business levels. Purchases of new inputs increased, but only in the manufacturing and service sectors. A bit of good news. The city of Harare has announced a significant reduction in the shop license fees. The move is intended to alleviate the financial burden on businesses and stimulate growth in a sector that contributes 60% of Zimbabwe's GDP. Now, the council said that the new fee structure introduces flexibility, offering various payment options to suit different business needs. Businesses can now pay license fees monthly, quarterly, biannually, or annually. Additionally, the fees will now be categorized based on the size of business. Small businesses will pay about $400 a year, medium businesses will do about $600, and large businesses $800 annually. The local authority explains this reduction responds to widespread complaints from SMEs regarding high fees and the rigid non-transferability of licenses. By lessening these costs, Harare aims to encourage the growth of SMEs, which is essential for economic stability, especially given the large informal economy resulting from company closures, currency instability, which we've known the country for, as well as inflation. Now let's leave Africa, or we're still in Africa, but now let's head to crypto and see what Ladi has for us. Bitcoin, I think its glory days is coming, Ladi.
Right.
In a couple of days, about 2 weeks, incoming President Trump will be on the state, and Trump comeback. We expect sentiments to be positive, at least for maybe some days before he's sworn in, and maybe a couple of days after, and then we'll find stable.
Because I guess it's all about price discovery, at this point for Bitcoin, post, inauguration. Who knows?
Post-Trump inauguration.
Yes, exactly.
Because Trump is the magic
It's about
word.
Trump, because we also have Ghana coming up
exactly.
this week.
So it's Trump inauguration.
Right. So it's mostly green, on the board today, with a few pockets of red, Bitcoin did try to maintain about $99,000, but it has pulled back a bit, 98,000. So it's ranging between 98,000 to $99,000. Maybe at some point might touch 100,000 again. Let's look at the sentiment in market. How are investors feeling? Looking at the fear greed index, they're still extremely greedy, and the market at 76 points. So investors still, tracking this sentiment to know when to exit or enter on pullbacks for the market. Let's look at some headlines now. We see Ethereum network that gained about $1.1 billion in the first trading week in 2025. And that's for Ethereum stablecoins inflow. That surged in the past week, exceeding other blockchains like Solana, which had about $202 million. The surge indicates strong investor activity and confidence in the Ethereum network as 2025 unfolds. Then we see Zhao, that's the former CEO of Binance before he was replaced. He's saying price is a distraction. We've seen for the past few months, Bitcoin surged to new record highs and broken past that long coveted $100,000 price point. We've also seen some cryptocurrencies, altcoins, giving over 200% price gains. But according to him, the Binance former CEO is saying price is a distraction. So to him, it's not about price, it's about the technology, at this point. Then Shiba Inu, the lead developer there, is warning of a fake token, and it's called, supposed to be called Treat. Yeah, a fake Treat token. They're supposed to launch a token at some point, but I guess some, fraudsters are outperforming them, when it comes to this launch. So they're saying, beware of that fake Treat token. That's for Shiba Inu blockchain. All right, let's bring in Gilbert Jokpata now. He's a lead at Smart Investor. Great to have you, Gilbert.
Yeah, greetings, Mr. Ladi.
Yeah, so
great to be here.
Great to have you. So today we're going to be talking about the crypto graveyard. Yeah, we've seen a lot of cryptocurrencies, come up in the market from 2016 all the way to now. Let's get a check on some of these cryptocurrencies. In 2016, the top five, we had the likes of Dash. We had Litecoin there. Those are the top five cryptocurrencies, and that's by market cap. We had the likes of Peercoin. There was Redcoin. They were in the top 100, at that time, but they've moved farther away, from that level. So if you come to 2017, you see Litecoin and Dash, they're out from the top five. We have the likes of, Litecoin is still there, but we have the likes of Monero coming in for the top five in 2017. Then we'll fast forward to 2025, and we don't see Litecoin, we don't see Monero, we don't even see Dashcoin for the top five in 2025. We have a stablecoin, XRP, and BNB. So in this whole journey, we've seen a lot of cryptocurrencies come and go. Some are still, trading, a lot dead, at this point. So, talk to me about how this impacts investing in this market going forward. There are over 2.4 million cryptocurrencies right now.
Okay, so this actually shows more like the evolution of the cryptocurrency market, especially those that have been able to maintain the top 10. So if you look, Bitcoin has always been able to maintain its top position, growing from about $6.5 billion market cap in 2016 to presently, like right now as we speak, about $1.9 trillion. This shows Bitcoin resilience in its role as a digital gold and also store of value. On the other way around, we've seen Ethereum steady growth from 2016 to 2015. And it was heavily driven by smart contract, DeFi, NFT, and the innovation it brought to the space. Yes, I understand that there are some competitors there for Ethereum, but Ethereum has been able to cement itself, as a major market when it comes to, DeFi, NFT. Others are just alternative. On the other way around, we had more of the emergence of new stable currencies like USDT and USDC. which actually struggles as contenders. And then we had other newer blockchain like Solana, Avalanche, and Doge, which showed up and propel news, some excitement, in the community. But then when we're looking at those kind of altcoin that, lose that position, like when we look at the 2016 position where there was Dash, Litecoin, XRP, you see there is something about the survival and also the forgotten. Why project like Bitcoin and Ethereum has been able to remain, at the top spot, the likes of Litecoin, EOS, and the rest, actually, even BSV actually faded from relevance. And this shows the ruthlessness and the competition that comes with the market. The thing is that for every successful crypto entrepreneurial story, there are hundreds of failure. I was looking at a report sometime last year that says over 2,000 crypto projects have been declared dead since 2016. And this does not even include the new Pump.Fun, that also in Tron, that has come into the market. But these are all as a result of, one, some are scams. We had projects like BitConnect, OneCoin that deceived investors, leaving losses. We have had the one that is due to lack of utility. So many projects always promise you innovation, but they could not actually deliver with a real-world user case. And sometimes, even if they provide a solution in the market, the question is always, does the market accept the solution they have given? One major thing, again, I used to see is weak governance. I have seen a great project, great utility, the market even accepts them, but poor management, internal dispute that sometimes can lead to a fork of a new crypto. And then sometimes it's bad tokenomics, or tokenomics mismanagement have always led to the fall. And another thing is always bear market cycle. Bear market cycle has a way of showing us those projects that were swimming naked. And that's why personally for me, I don't like taking projects that are not bear market tested, into bear market. And yes, this leaves us with lessons on how they have shaped the investment landscape where.
Right, but
the lessons.
Yeah, go on.
So there are lessons it comes with and how it has shaped how investors invest in the market. So first, we always look at investing only with projects that have utility, and then beware of hypes. There are always hype, trends that comes and fade out, and more like looking at projects that has long-term purpose, value, consistent innovation, strong community, and adaptability. Because just like in the law of evolution, in the biological species, it's always that animal that is always able to adapt that always evolves. So a project's ability to adapt to the new narrative is always very important.
All right. So with over 2.4 million cryptocurrencies right now, at some point, is it safe to say, let's not produce any more cryptocurrencies? Let the ones available do something.
Well, it's like stifling innovation. There are a lot of entrepreneurs that are still coming up with great idea, every new week. And yes, there is a place where the market needs to test, and saying that is like we are stifling innovations and like topping what we can achieve, as humankind with technology. I think entrepreneurs should be allowed to innovate. This way it propels humanity, even probably maybe away from Earth to Mars, like Elon Musk wants. But then I think that that is the rule, why the role of regulation is always very important, so that regulators are there to make sure, yes, we want innovation, we want, entrepreneurs to play in the capitalist market, but you need to play by the rules of the game.
Right. Thank you so much, Gilbert Jokpata, there, giving us what to expect in this market as the cryptocurrencies just keep growing. Thank you.
Yeah, thanks for having me.
Yeah, so Ini, they have it. There's so many of them.
Yeah, let me just put fear in some of our hearts.
Okay.
Because that means there's some projects that you see that you shouldn't invest in.
Right.
Because you don't know when they will die off.
Exactly. We know that they'll continue being there.
Exactly.
After a couple of years. So,
yeah, well, but as you always say, it's a risk.
Right.
Investment is a risk.
And I guess that's why some investors have that mindset that if it's not Bitcoin, they're not going near it. But who knows?
Yeah. Thank you so much, Ladi.
Thank you.
All right, so that's it on the program. Thank you so much for being a part of it. Today is the first full trading day of the year 2025, so we have a long way to go and many things to do together. I know it's going to be exciting. I'm expectant as we discuss business and the economy. I'm John McQuarrie. I'll see you 10 p.m. for the stock market reports.